Hey traders, it's John Howell again, and in this video I'm going to walk you through the important trade, money and risk management tools that you must use so that you can start getting ahead when you're trading. Okay, so when you're trading, remember there's three different things. There's money management, risk management, and trade management, and these are the biggest things. These are some of the biggest things that most people don't implement or focus on when they're trading, but it can make a huge difference to your end result, i.e. money in your account. So without further ado, let's get straight into the education. And the next thing I'm going to be talking about, which is very, very, very important, which a lot of people simply forget to think about, is trade management. Okay, trade management. What's the importance of trade management? How do we use trade management, and what do we need to keep an eye out for when using trade management, and why is it so crucial for us? Well, the reason why it's so crucial, the last question I'll answer first. The reason why it's so crucial for us is because trade management can be the difference between you having a successful trade and you not having a successful trade. And what I mean by that is this: most people when they're trading and they're trying to get into particular stocks, or they're trying to do some things, they'll wait for the market to move. Let me just show you something here. Okay, so now we're looking at again, it's just a blank chart, all right? And once again, this doesn't matter whether you're trading Forex or futures. These analysis applies to every market out there, and that's the benefit of this. So what we're looking at right now is we're looking at a chart, and let's just zoom this in a bit more, okay? And the differences between a good trade management and a bad trade management is simply waiting for pullbacks. See, as we know, how the market works is the market runs and then stair steps, runs and then stair steps, runs and then stair steps, and then runs, right? So if that's the case, and we know on the flip side, the market drops and then stair steps, and drops and stair steps and drops. If we know that's the case, then where is the most highest probability? If we're looking at this short trend, when is the most highest probability or the most beneficial time to try to get in? At the tops, right? Before the next move down. So up here. And the market runs down, market comes back up. If you want to look to short it, then up here, right? That's the best time. Now in this uptrend, where is the most beneficial time or the best time for us to get in? Down here, right? And then down here, and then down here. Now, as you know, we can't pick the bottoms, and we're not going to try and pick bottoms. We're going to be using the systems we've learned in this package, in this home study course, to really identify the different systems and different ways we're going to trade. But here's what we can do, or here's what we do to maximize the trade management in our favor. What we're going to do is we're going to get in not when the market runs. See, this is what most people do. They might call this one here, okay? This is like a bit of a flag formation here. Okay, if you haven't watched that, then go watch the flag formation. It's a very, very powerful pattern, and it's also one of the setups to look for on a continuous basis. So if we get here and we say, you know what, as the market pops out, this right here is our entry signal, as an example. What they'll do is, most people out there that are amateurs, they'll actually wait for the market to run and then run on again. And then what happens is this: the people who got in down here are now getting out up here, and then what happens is this: the amateurs start to get in here, and the market runs on a little bit, then comes back, and then guess what? Stops them out. Then what happens? Then the market has a pullback, gives you a nice little flag formation again. As the market pulls up again, the professional trader gets into here, and what happens is that the market runs on, and the professional trader is getting out here, but the amateur trader is getting in here. Can you see the logic behind what we're talking about here? What most amateur traders do, and it's not because they're amateur, it's because they're frightened and because they're nervous about the system. And that's why it's important to paper trade every single system you learn in this home study package, every single technique, before you before you put money onto it. And so what we're looking at here is we're looking at exactly the way professional traders make and the way not professional traders do. The non-professional trader, what they will do is their trade management is all out of whack because they're getting in after the run has already happened. They want to see the breakout. Then they want to see extra confirmation. And then they just want to see one more little bit extra confirmation to get in. And by that time, the trade has been done. The trade's been done. The trade's over. And so this is an example of what it is. So how you have good trade management is getting in before the run. If the run happens, even like if you're supposed to get in down here as an example, and that's where your entry was, and the market does this, even if the market's already up here, the run is already done. Don't chase it. All right? That's bad trade management. When you're trading and you're trying to manage your trade, that's bad trade management. Okay? What you're doing there is just simply stacking the odds against you. You want to get in before the run. Okay? And let's just zoom this over a bit more so we can get a good look on this. What we're trying to do is we're trying to get a benefit of this. We're trying to get in on here before it runs. We're trying to get on here before it runs. We're trying to get in on here before it runs. Make sense? No, we're not trying to grab the bottoms here, here, and here, because you know what? That's catching a falling knife. The reason why is this, because as we're trading the markets, right? Let me see if I can get a bit of black here. As we trade the markets, right, we want to see the market come down. We want to see the market bounce, and then we want to get in. We want to see the market come down, then we see the market bounce, and then we want to get in. We want to get in after the bounce. We don't want to get in as the market runs up to here, and then someone's like, oh, well, the market's been going up for a while. Maybe I should get in here now, or maybe I should get in. And that's the wrong thing to do. That's what I call the 1-2 sucker punch. 1-2 sucker punch is that it's had its first move up, and all the professional traders are now getting out because they made their profit, and now the amateur traders start getting in, and then they gave another sucker punch by throwing another punch at them, and the market went up just a little bit more, and now everyone's coming into that market. That's the second sucker punch, and then suddenly it pulls back. And I'm sure you've been there before, right? If you've been trading for quite some time, or any time at all, you'll get in position and suddenly it'll turn on a dime, and you're like, what the heck happened? I promise you that if you actually go back and look at some of your trades and that happens, now sometimes that's going to happen even if you get into a trade here, right? Like just by getting in on the swings. But I promise you that if you go back and look at some of your trades, if that's happening to you, you're actually chasing the market, and then after you chase the market's already had its big run before it's due for a pullback. All right, and now sometimes with some stocks, the market can the stock can just go up and go up and go up and go up and just a little sideways, and then go up and go up and go up and go sideways, and then go up and go up. When the market's doing this, what do? You sidestep the market. You don't do anything with that stock or that future or that futures market or forex market. You don't do anything, right? Why? Because the market's just going up, 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 and up, and we don't know when it's going to pull back. The best thing to do is good trade management is wait for the market to pull back and then re-enter on that. Make sense? So that's the first thing we need to do, is wait for the pullbacks. Once again, let's just quickly recap on this. If the market's stair-stepping down like that, then we're trying to enter here and we're trying to enter here. If the market's stair-stepping up like this, we're trying to enter here and we're trying to enter here. Okay? No, we're not getting in. We're not getting in down here, and we're not getting in down here. We're not getting in up here, and we're not getting up here. Okay? Make sense? Okay, beautiful. Now, the next thing we can do for trade management is our good old stochastics tool, right? So let's actually add the stochastics back in. Find on the stochastics now. Stochastics, let's change this to our good old 9 and 5. Okay. Click OK. Put this to 3. Alright, to 3. Click OK. And now we have our stochastics. And sometimes the stochastics can give us a bit of a warning tool of when that run may be exhausted. Okay. So it just depends on what you're looking for. As an example, if we got in on this sort of bull flag formation through here, okay, be a nice big bull flag and market runs up, then right here was our entry. As an example, right there was our entry, right there. Okay, right here was our entry, and you can see the stochastics down the bottom here. But as the stochastics get into the oversold section, that's an alert that, hang on, this market might be due for a pullback. Now this is obviously if we're trading short term, okay, short term. The market might be due for a pullback. So as the market runs up, guess what? The stochastics get here, you're getting out up here, and then guess what happens? The market pulls back, it goes back into this level 3 here, it gets that level 3 there, and then it has a run up. Has a run up, the stochastics get into there, and so on and so forth. Make sense? Has a pullback, stochastics get into there, into the oversold section, then when it runs up, it gets into this overbought section, and then you say, you know what, it's time to get out now because the stochastics are really into the overbought section, and we could get some turnaround. Now, granted, it could keep going up, and don't kick yourself for that. All right. Some things that people do, including myself sometimes. So that's talking to me as well. So they're the couple of things that we can use to identify, to helping us with trade management. The first rule of trade management is don't chase the market. If the market's already even started to move, do not chase the market. Okay, it's done. The trade's over. Don't even get to it. Okay, we want to be getting in before the run. Okay, before the takeoff, either down or up. The next thing we can do is we can add indicators such as the stochastic, to gauge when the market might be overbought or oversold. And this is going to help us getting in, getting out, and just help us with timing as well too. Okay. So I hope you've enjoyed this. These are 2 simple things you can do right now, which is going to increase the way you use your trade management and the way you manage your trade as well. So I hope you understand the importance of trade management. Follow that one rule you just learned just right there and then, and it will change your life forever because your trading will benefit from it. Every time you trade, it will benefit from it, okay? So just that one little thing, I see that so many people when they're in the markets, you know, that one little trade management is going to get you in early. It's going to get you on. It's going to get you in not late. And as you know, right, the market goes in moves. So this is all about getting in at the right time and getting out at the right time, okay? Now, obviously, you're not going to make money on every trade, okay? But the whole thing is about getting in at a good time so you can have a small loss, but also have a good profit target. And that's where you want to be getting in. And trade management is all about helping you get into that level there, okay? So I hope you understand this, okay? So in the next section that we're going to go through right now is that I'm going to show you, and I'm going to go through the money and risk management. So let's get straight into it. We're going to be talking about the risk and money management techniques that we need to be applying to this. I promise you that if you don't have this technique, risk and money management under control, nothing will work for you, okay? I promise you that. Nothing will work for you. You need to have good risk and money management under control, okay? Now we've understand good trade management, but good risk and money management is this. Good risk management is what you're risking on the actual trade itself. So risk management, what you need to be doing is what we talked about before, is trying to have a smaller stop and trying to have at least 3/4 to a twice as much, at least 1 to 2 times more profit potentially in the trade you're getting into than your stop. Okay, so as an example, if you're your money management rules or your risk management, I'm doing this on a chart here. Your risk management is, you want to try and go for at least more than 100% on your risk. So if you're risking, let's call it $100, okay, then your profit potential target needs to be around about $200, okay, as an example. The reason why I say as an example, because sometimes it might be a bit lower and sometimes it can be very much higher, as you've seen in some of the other systems and strategies and the setups and methods in this home study package. You can see that this here is, some of the trades are really going to give you a lot exponential growth. You're going to be having, instead of $100 to $200 profit, you're going to be having $100 to $300-400 profit. Okay, so that's what you want to try and do in every single trade. So the risk on every single trade is going to be that. Once again, if you're looking to get in on a trade down the bottom here, you want to make sure that your risk is small. That's the reason why importance of trade management. If you haven't watched a trade management video, go watch that. That's the importance of trade management, to get in before the market runs and then getting out as the market's running. Okay, that's good trade management, and this is also going to help you with your risk management as well too. The next thing we're going to be talking about is money management. Okay. Now, money management is simply, in my point of view, how much you're actually trading of your account at one time. And, I've been reading a lot of professional traders and seeing what professional traders do. And some people say higher and some people say lower. What I personally say is, depending on the size of your account, but if you can trade around, say, 2% of your account, or risk only around about 2% of your account on one trade, then I would say that's good. Okay, I would say that's good. If you can do it much slower, then even better. And here's the reason why. If you're in a position where you're going to have 2 or 3 stop loss, right? Well, you know what? That's going to happen. Because you're going to have times where you're in a situation and you're going to have 1, 2, sometimes 3 or 4 when losing trades in a row. But you need to have your money management under control. Before I had a situation that I had 5 trades in total. Okay, 5 trades in total. 5 trades. I had 4 losers. Okay, 4 loss, and I had 1 win. What do you think my account was looking like at the time? Pretty bad, right? It's like 4 losses, 1 win. Are you serious? That's pretty bad. That's pretty low percent success rate. Really low. I'm not good at math. What's that? 25% success rate or something like that? So the overall percentage was that my whole account here was only down around about 1%. Out of all that, my account was down only around about 1%, or just slightly above that. Okay, around about that figure it was. Now you're thinking, how can that be? 1, I had good trade management, and 2, I had a smaller stop loss, and I let my wins run. So this win here took out 3 of these. Took out 3 of these positions, and only had really 1, and call it 1 half. Okay, so this win here took out 3 of my losses plus half of my other loss, and left me only with a small loss. So this is the importance of money management. Because I had good money management, at the end of the day, I could have a really, really, really bad win-loss ratio, and even if I'm still not doing really well, my account is not damaged too much because my money management is under control. I'll give you an example of how I trade and how it's important to do this. Let's just say, for example, you had a $10,000 account. Okay? And let's just say you're actually trading any market out there. Okay? Let's just say you're trading options as an example. I'm a big believer in options. I like trading options, both writing those options, doing spreads, as you're going to learn in one of the videos here about spreads and about options. Okay, you can either write options or you can buy options. So let's just say, for example, you're going to buy an option. Okay, out of this $10,000, most people would say, you know what, I'm going to put 2 or 3 grand on a trade, and that is the wrong thing to do. Okay, the first thing you need to do is and this is a bit of a basics 101 for options. Okay, I'm not going to go into options too much here because this package wasn't meant for introduction to options. It was just more of, this package here is to help you use systems, so no matter what market you're trading, you can do this one. Okay, but let's just do it 101. What you need to be doing is you need to be trading in the money options. What is that? It's basically trading. We'll keep it out in the money options. If you want to know more about options, then I can help you out with that. Okay, so you want to be trading in the money options. The reason why is because they're much less risk, as an example. And what we want to do is we want to be trading out of this $10,000. We're only going to trade on any given one trade $500 at any given trade, which equals what? 5% of our account, which actually still is quite high. But if you don't have a lot of money, then you still need to have a bit more on the trade. So 5% is the maximum, right? So our 5% is the maximum, and let's just say, as an example, you had, call it, you know what? I'm going to be really, really bad at math here. Okay, but I'm just using an example, so don't slap me around and say your math is wrong here. I'm just pleased to take this as an example. Okay. Let's just say that you had, out of this 5%, out of this $500 you put up, you had a 30% loss. So out of this 5%, you had a 30% loss. So what does that actually equal? Well, it equals around about what? $150. Now, $150. Now we've had a 30% stop out, okay? Which is actually quite a decent stop out, right? 30%, sometimes a bit more. But if you had a 30% stop out, as an example here, now you've lost how much? $150. Now, how much is $150 on 10,000? 1.5%. Nothing, right? Absolutely nothing. You risk only 1% of your account on the trade. A bit over 1%. And this is the type of tools you need to have. Doesn't matter what market you're looking at. You need to say, okay, if I get a stop out here, how much am I damaging my account? And if you're damaging any more than a couple percent of your account, call it more than 3% of your account in any one trade, that's way, way, way too high. Okay? Way too high. Because if you think about it, right, if you had 10 grand in your account and you lost $150, which is only 1.5%, you say, you know what, you're not really damaged that much effectively, right? You're not really, mentally, you're not really down and out. Because what happens here is this. Whenever we're trading the markets, if we see our account go lower and lower and lower, then we start to get nervous, right? We start to be inconsistent. We start to break the rules and so on and so forth. But if we can be in a position where we actually do get a stop out, and it's only a small stop out, we say, oh, it was only $150, let's keep going, let's stick to the rules. Make sense? So if you had that, and you had that a couple of times, but then suddenly you come out with an 80% winner, okay, an 80% winner, then as you can see, you could have 2 or 3 of these, and an 80% winner would almost cover the loss. Especially if you're having a small stop and then letting the win run. Make sense? So it's important. It's important. It's the most important thing I'm going to stress about. It doesn't matter what system you're trading. You need to have your money management under control. You need to know, you know what? You need to say, you know what? I don't care what's going on here. I know that at the end of the day, if I do get stopped out of this trade, I'm only risking a couple percent of my entire account maximum on this trade. What's this going to give you? That's going to give you confidence to step up the next time, even if it doesn't happen. Step up the next time, even if you don't feel okay. But you know, you said, you know what? I'm only risking a couple percent. So what's the worst thing that can happen? I'm going to lose $200 today out of 10 grand. That's not a bad scenario, right? So you're going to be more consistent with your trading. Also, the next thing that's going to happen is you're going to have the ability to stay on plan with your actual system. On plan simply means that you're going to stick to every single trade that appears and then comes up, and you're not going to be nervous, right? Because you say, you know what, the worst case scenario is that I lose X amount of dollars, right? I lose X amount of dollars when it actually comes to this trade. Now we know we're going to get stop outs, but the worst thing that can happen is for when we're trading, for us to have a big whack. Like if we're trading, call it 20% of our account, which is 2 grand, and now we lost, call it, we now lost what? 20% of, we lost 20%, and out of that 20%, we now lost 30%. We're now trading $2,000 as an example, and now we just lost how much? $600. We're trading 20% of our account. Okay, it's $600. So we're trading 20% of our account as an example. Now I'm not telling you what to do. I'm telling you not to do this. Okay, don't do this. This is what people do, and this is the reason why people go down the spiral really, really, really quickly. Okay, and they kick themselves in the butt for it. They would trade $2,000 over here. Okay, let's just do this over here. They'll trade 20% of the account. Okay, they will then add 20% of the account, which is $2,000. And example, if they had the same 30% stop out, because they're focused on the greed is, but John, I'm going to trade $2,000 because if this wins, I'm going to win big. You know what? That's the reason why you get kicked out of the market big and continuously, because you're not thinking the downside. And the downside, if you take care of the downside, the profit will take care of itself. Okay? Most people try to think about the profit and forget about the loss. Guess what? Forget about the loss is going to take care of your bank account. take care of the loss first if it does happen, and the profit will take care of itself. Okay, so now we've just lost how much? 30% of $2,000 is $600. $600. So $600 out of a $10,000 bank account is how much? You've just now lost 6% of your entire account on one single trade. You do that twice in a row, your account is now down $1,200 or 12%. You do that 3 times in a row, and your account is now down close to, what's that? And 17%, almost 20% your account down if you have three losing trades in a row. But remember what I did before. Remember I said I had 5 trades in a row. My first trade was a loss. My second trade was a loss. My third trade was a loss. My fourth trade was a win. My fifth trade was a loss. Now, can you imagine if I was trading 20% of my account and I had big stop outs like this? 30%, maybe even 40%. And I had, say, a 10 grand account and I had this sort of figures and this happened. With fees and charges, my account would be down almost 20%. But because... So if that was the case, I'd be freaking out, right? What would happen? I wouldn't step up to the next trade. I wouldn't stick to the plan. I wouldn't allow the trade to mature. Once I get into the next trade, I wouldn't allow the trade to just run on and to go on and to accumulate more profits. I would have damaged my account by losing almost 20% of it. This win here, instead of taking out most of these losses, I would have only got just a small little loss, a small little win, because I would have been so nervous about losing any money that I would have just lost all that potential. And all that potential is now gone, and now you're nervous and you say, damn market, the damn market got me again. Right? That damn market got me again. Which is simply not true. You got you. Right? So as you can see, by doing this can really damage you. But if you're only risking $150 or $200 per trade on a $10,000 bank account, you can have 2 or 3 losses and then suddenly have... And say, you know what? I'm only losing a couple $100 per trade. It's not a big deal. I can have 2 or 3 losses, have a nice big win, and boom, I'm back in action again. Make sense? So that's the reason why here I could have a loss, a win, a loss, and only be down around about 1% of my account in total. That was including fees and charges. Are you starting to get the point now of this whole money management? This is the pinnacle of what's going to make you or it's going to make you or break you in the market. This is the biggest thing that I see with most people out there, and the reason why I'm harping on this and extending this video on this one sort of system here is or this one method, money management, is because it's the pinnacle of all pinnacles. Every single coach that I meet that makes a lot of money from the markets. Heck, I just read a story of a guy who turned $1 million trading stake and had a company there and started trading that and turned that $1 million trading stake into $90 million. He was using various strategies. I'm not going to go into the strategies, but he was using various strategies. But do you know what he said? His number one technique, that number one tip that he gives to any trader out there is risk no more than 2% of your account on any given one trade. Actually, no, that's a lie. He said trade no more than 2% of your account on any given one trade. So you're only risking, call it 0.5% of your account, okay? But if you've only got a smaller account, like $10,000, then I'd say 5% is the maximum. If you can afford to put, say, 100 grand into a trade, okay? If you can afford to put, say, $100,000 into account, it doesn't mean you're going to trade $100,000. But now, guess what? Now, what are you going to do? You're going to be trading what? 2% maximum, which is now only $2,000. If you had a stop out of $2,000 and call it 30%, you've now lost $600 of a $100,000 account. Make sense? So that's where you want to go. So even if you can put a lot more money in your trading account, instead of saying, I'm only going to put 10 grand in there. No, you know what? Put as much money as you can as possible, but make sure that you are 100% disciplined. Do not put any money in your trading account unless you can be disciplined with this rule. Okay? If you have only got a little bit of money, say 5 grand, trade no more than 5% of your account at one time, and out of that, you should be risking no more than 50% of that on any given one trade. Call it options or whatever. Okay? If you can put a lot more on, then minimize that. Okay, so as what I do is, when I first started trading out, I first started trading at 20%, and I blew my account up 3 or 4 times in a row, 2 or 3 times in a row, should I say, before I got going. And how I got going was I was trading the exact same strategy, but I said, you know what? I'm going to have a 10 grand account. I'm not going to trade 20%. I'm going to start out at 5%. And out of that 5%, my average stop is between 20 and 35%. So there you go. Guess what? If I have a stop out of, say, 20%, which was my average stop out, if you're trading in the money options and you're trading options here, then that's actually a pretty good stop out. Okay, that's an average stop out for that sort of strategy. If you get 20%, what is 20%? And I apologize for all the drawing over the charts. Just using this on the chart. But what is 20% out of? Remember the figure was $500. It's now $100, right? $100. So you just lost. You got a 20% stop out. And all you lost was 1% of your account in total. 1% over here. Wow, there's a lot of drawings on there, isn't there? Okay, so I hope you get the point now. This is the biggest thing that's going to destroy you or make you a superstar trader. All the systems and processes and setups you learn in this package or any package out there, it doesn't mean crap unless you learn this one simple technique. And you know what? We started off with risk management, which that was the easy part, having smaller profits and smaller stops and bigger profit targets. But the next thing we're going to move through is we're going to make sure that we have good money management. Do not be risking a lot of money on your account at one time, because 2 or 3 stop outs in a row is going to destroy your confidence. It's going to destroy you trying to stick to your trading plan. It's going to destroy any chance of you making falls, okay? Every single time that I've personally traded a lot more money than I should have, it's end up of me losing money. You've probably been there before too, okay? So be smart about your money management. I hope you enjoyed this video. I hope you enjoyed this session. This is the biggest thing. Send me an email. Go to Trading Investing For You, or send me an email or support@tradinginvestingforyou.com. I'd love to hear your feedback and your opinion as well too, based on this as well too, okay? So I hope this helps. Use this as a guideline, and at the end of the day, use this as general education. Use this as a guideline of where to start with the markets, okay? But then you can start to change it and mold it to the way you're liking. But personally, don't risk any more than a couple percent on your account on any given one trade. Even that's quite high. All right. Please, no matter what system you're trading, make sure that you're implementing these strategies into your trading, because if you want to be long-term successful, because here's the thing, okay? This can be the differences between making money and not when trading, okay? So take everything you've learned in all these videos I've been putting out for. I've been putting out a lot of videos, as you can see the links at the top of this page. I've been putting out a lot of videos for you to help you when trading the markets, okay? So take everything you've been learning and put it all together, and you will start becoming a much better trader. So if you like what you've been seeing through these videos, then you will like and you'll be interested in my weekly coaching and platinum event package. This is all about getting full access to all my education, strategies and software that I use all the time to trade the markets. And as you've been seeing, right, I've been giving you just a fraction of what is actually involved into the actual membership area itself, okay? So if you've been liking what you've been seeing here, then it just gets better and better and better inside the membership area. Okay, that I use all the time to trade the markets. Here's the thing is, okay, then I'm on Skype, just me and you, one-on-one, coaching you every single week. This is all about getting education, and then I'm on Skype helping you every single week, okay? Plus access to my platinum event. This is 5 full days of living in the same house with me and a select few other high achievers. During the day, I teach you everything about trading, health, balance, everything you need to learn. And then what I do is I teach you a lot of stuff I teach you everything I know about trading and everything like that. And then we go straight into where I'm trading live right in front of you, okay? So there's 2 things, there's 2 parts to this. One, let's go back to this slide here. One, it's all about getting all access to my education strategies and software, and then me and you one-on-one personally, not in a group or not at a seminar or anything like that. It's just me and you one-on-one personally. That's it. Me there every single week coaching you with the education, with the strategies, make sure you're getting better and better at it. Okay. Then the next thing is the actually access the 5-day platinum event, where I teach you everything I know about health, balance, trading, Everything like that, which is actually going to make a big difference to all areas of your life, okay? And then what I do is I actually trade live right in front of you, okay? So you know that it's having a coach there every week, making sure you're doing the right things, not making mistakes, and just keeping you on track is where all the progress happens. You know, and you're probably in the same situation, right? You see in video too where I walk through where people just do the education, they don't have a coach there, they don't see the mistakes they're making, and therefore they just keep repeating the same process, right? But it's having a coach there is going to help you every single week, okay? That's why and the reason why I say that is that's why you can't buy anything from me on my site when it comes to trading education, because I know that it's having me as your coach and education together is where it's at. And as I said before, like I used to just give out my education and software and stuff like that, or used to just basically sell that. But I realized that it was the education that people needed. So therefore, for me personally, as running a business, it's much less of a heartache to take on just a select few people per year on a personal coaching basis than it is to have a lot of people taking up the education and customer support and stuff like that. I don't know about you, but if you know anything about running a business and having a lot of clients coming in and buying your products and stuff like that, it can be a big hassle, okay? And the fact of the matter is that I don't need to run this business. And so therefore what I do is I've just now restricted it where I'm not just giving out the education. I want to be able to make sure that when you get the education, you're getting the best of the best to help you move forward. And that's having education and me as your coach moving forward, okay? And that's where it's at. So I only open up this twice per year, and this is the last time this year I'm opening up, okay? I only open up 5 spots because it's me and you personally every week. So I can't take on a lot of people. Makes sense, right? And at the event, what you'll see very soon on the next page is at the event, I only take on literally a handful of people every single time I do the platinum event, because I really want to give you personal, detailed access to me personally, and so I can spend a lot of time with you personally to help you move forward, okay? So, and all I say is that since doing this launch, you can see all the different videos I've been sending out. Since doing this launch, I've had 3 of the spots already filled and taken up, okay? Now, there is 2 spots left, so click on the link below right now. It'll take you over to another video where I'll walk you through all my story, my cancer story, my bankruptcy, how I almost went bankrupt, family story, backstory, and basically it really walks you through a good detailed story about where I grew up from and stuff like that, and who I am personally, how I got involved with the markets, and how I grew from there, okay? And how I just started with a $5,000 trading account and started growing that into making thousands and thousands of dollars per month and tens of thousands of dollars per month, moving forward from there, okay? And so I literally walk you from the ground basics right up to the story of, you know, make as much as $80,000 in a single month while spending half that time in Las Vegas. I walk you through all that story, and then I also talk to you and share with you what the whole weekly coaching is all about, and plus also the platinum event as well too, okay? So click on that link below right now. That's going to take you over to that video as well. Okay, it's going to share that with you. Okay, so while you're doing that, okay, while you're watching that video, I'm going to start preparing the next video for you. And in the next video, I'm going to walk you through some of the mindsets of, or should I say, the mindset of a successful trader. Now, there's a lot of different components when it comes to mindset, but this is just one area of a mindset of a successful trader. And also I'm going to add some other things you should look out for when trading as well, okay? So I hope you can see I'm really trying to help you out here when it comes to understanding the mistakes, to understanding the trading patterns, to understanding trading systems and stuff like that. And as I said before, this is just a fraction of what you actually get when you actually sign up to my actual coaching program as well too. Okay, so as you can see that my strategies are simple, they're really easy to follow, and you can see that they absolutely work when trading the markets, okay? And so therefore that's the reason why my actual coaching program gets filled up really quickly. So if you really want to get involved with this, then I only have a couple of spots left. Well, should I say I only have a couple of spots left now. I have a few people to call who actually filled out the application. And then we'll go from there, okay? So anyway, I'll see you in the next video, which is all about the mindset of a successful trader. In the meantime, as I'm preparing that, click on the link below, go over to that other video, because it's going to walk you through everything about who I am, where I grew up from, how I got involved with trading, and how I grew from there, and all got cancer story and everything like that, plus also everything about the coaching program. And if you are interested and you want to get involved with this, and as I said before, I only have 2 spots left, and then I'm shutting it down for the rest of the year. then make sure you fill out the application form on the next page, and I'll personally call you to see if we're a good fit. You can't buy yourself into this program. I want to make sure I call you and make sure that I'm happy. Happy taking on, because I said I only take on 5 people, and I want to make sure that we are absolutely a good fit moving forward. Okay, so go over there, fill out the application, and I'll talk to you really soon. This is John Howell here. Remember, success can be yours if you go claim it. So step up, take massive action, and face your fears today.